Hey, what's going on, everybody? This is Tony here. Hope you're doing well. Today, I wanted to go over the 3C trade setup. This is part of the belt system over on the website. So, if you're interested in learning the TDU method, it's got SMC, it's got Elliott wave, algo hunting, all that kind of good stuff. Definitely head over to the site and you can purchase these belt systems. The white belt is free, so you can get a little taste of it and see if it's for you. And then you continue on if you find value in that. And just for signing up, you do get free Elliott Wave cheat sheets as well. So if those things interest you, definitely go to the site and check it out and sign up. So the 3C trade setup, this is something I look for all the time when I'm scanning charts. It can be found on everything from the yearly down to the 1 minute chart. Just got to scan and look for them when they're setting up. Of course, this isn't an infinite money cheat code. We can just start printing money with this, but this is a good tool to have in the toolbox and pull out when you do see this setting up, and we'll find out why a little bit. I am going to be going through, starting from the beginning intro level and working my way up to some more advanced stuff. So if you're advanced and you kind of get this whole thing, stick around. You can kind of see where I look for these things to set up. It can be anywhere on the chart, within an impulse, within corrections. You can find these setups pretty much anywhere. It's just a matter of how degen you want to get on it and at what degree you want to trade it at. So I'm going to go through all the basics here and the normal caveats. Do your own research, not financial advice. Trade safe, trade smart. All right, let's get into it. So to start things off right away, the 3C trade setup, why is it so powerful? Well, one of the major patterns that can be found throughout the market here is this right here. Many other methods call it different things, but in Elliott wave, this is called the zigzag. This can be found in motive waves, corrective waves, depending on which degree you're looking at. So this is a very powerful pattern that can be found throughout the markets, any markets. And this is part of the 3C trade setup. We're actually focusing on this portion right here, which is the C. The other reason is because this pattern shares similarities with the wave 3 setup, or the wave 3 of an impulse, which would be something like this. So you have the most common pattern, which is the zigzag here, and then you have the most powerful pattern, all kind of culminating or starting the same kind of setup here. And that setup being, and we'll go over this a little bit further on, that setup being impulse wave up, internal correction, before a blast off, either for the wave 3 or the wave C. The other good part of this is that whether it's a 3 or a C, there's some similarities or some places we can take profit on this that can benefit us with minimal loss or drawdown. All right, the first thing that we have to recognize too is that impulses are going to shoot up past this pivot here, and it is very rare for a zigzag to truncate and not make it past this level here. So this is some powerful information. If this could be an initial take profit here, a super conservative take profit here. And then when we break this pivot, we can start looking for profit areas and most likely targets for a zigzag and for the wave 3. Let's break down a little bit the basics and kind of look at this a little bit differently and go step by step on what we're actually really looking for here. All right, so what is the first thing we're going to look for this trade setup? And I would definitely argue that this is the first thing we're going to be looking for in any kind of trade setup, and that's going to be identifying an area of importance or interest. It can also be considered a point of interest, depending on your terminology, but essentially what we're looking for is some fibs, geometry, it doesn't matter. Whatever your method is, EMAs, doesn't really matter. We're looking for a point of interest here to kind of base our trade setup off of. So that's the first thing we're going to look for here is the area of interest. All right, now that we have our area of interest identified, step 2 is going to be identifying an impulsive reaction from this area of interest. and then it's not a C of a flat. So an Elliott wave here, we're looking for an impulsive move or a swift move away from an area of interest. Again, this can be fibs, EMAs, geometry, whatever your method is. Area of interest is what we're looking for to play off of. Basically, any kind of setup. So an Elliott wave, we always want to look left to see if we're dealing with the C of a flat, since impulsive waves can be found in that corrective structure. And with that corrective structure finishing in an impulse, we'd get a blast up past the initial beginning of this move here. So we're going to look left and look for that kind of pattern over here. If we don't see it, we can check that off and say, okay, we have an impulsive move, swift move away from an area of interest. Step 2 complete. All right, step 3. Observe and identify a potential corrective retracement forming within the range of the identified impulse. So basically what that's saying is we're looking for a corrective pattern here. We have this initial swift wave move down, or the impulse wave move down here. We have the impulse range low down here, since the impulse started down here. We have the impulse range high here. This is where the potential impulse ended. As you can see, the corrective pattern broke the wave 4, so that negates that this wave 5 is still in motion, and we're going a little bit deeper. So right now, what this looks like to me, like I was saying before, it looks like one of the most common patterns we can see in the market, and that's a zigzag. All right, so I've identified my corrective pattern here. That's wave 3. We're just looking for an internal correction between these two ranges here, these two levels. All right. All right, so now that I feel that I've identified this corrective pattern in here as a zigzag, I'm going to move on to step 4. Step 4, based off of the most likely targets for the corrective pattern, again, a zigzag for me, and other potential confluence, scout and entry, look left. So what I'm looking for here is kind of a collaboration or confluences of this pattern in here ending, as well as a retracement within this pattern, and many other confluences. So for this situation, since I think I'm dealing with an impulse, I'm going to be looking for this motive wave of the C to end. I'm going to be looking for a one-to-one relationship between the A and the C. I'm going to be looking for this geometry here, the channel line. Since corrective waves are most likely held within corrective channels, I'm going to be looking for that to end as well. And then I'm looking left. I can see there's a little bit of structure here that could play as resistance or support. And then I'm looking at the most likely target as well for the retrace here of a corrective structure as a wave 2 or B, which is going to be 50 to 618, sometimes a 382 for this range, for the internal retracement of this range. So I have a lot of confluence here. Confluence leads to confidence, and that's kind of what I'm looking at here. A lot of different things lining up for a potential entry, and potential for it to play out is a little bit higher because of all this stuff adding up. Nothing for sure, just potential. All right, now with all that out of the way, we're going to move on to number 5. And we're going to look for taking profits conservatively at wave C or wave 3, most likely targets if reached. We're going to look for the fibs, most likely target for the fibs of wave C and 3, geometry metrics of the wave C and 3, subwaves of the wave C and 3 to kind of look for an ending point to take profit. Again, same thing with stop losses, take profits. That's something you're going to have to figure out. There are some conservative take profits just based off of this setup here. One of them is going to be this area right here where we get the initial break. Zigzags, again, rarely truncate, so a move past this level, I don't want to say is guaranteed, but is likely. So this could be a take profit area for you. And then we'll start looking into wave C most likely targets, which again, I kind of went over up here. Wave C's, we're going to see a one-to-one relationship of the initial move down, approximately. Again, it's not going to happen 100% of the time, but this is kind of the pattern we're looking to play out. We're going to come to the geometry here, this channel line as well. This would be another spot, a good spot to look to take profit. And then again, you're also always going to want to look left. Is there kind of other fibs involved? Is there an area of interest over here to the left as far as structure goes? Anything like that, you're going to want to look left as well, because there could be pretty big support resistance like right above our 1-to-1, and we would want to consider that as part of our analysis in taking these profits. All right, so those are just a few of the most likely targets here for a wave 3, and then the sub waves as well. If this is pulling a nice triangle right here, we'd have to analyze this triangle and kind of get a pinpoint cluster of where this impulse could potentially end. So for the wave 3 most likely targets, big tell can be a break of this base channel trend line right here and a move away from it swiftly as possible. The swiftness does count as confluence, so if this move does move swiftly away out of this trend line here or the channel line here, that can be a tell that we're dealing with the wave 3, and then we would move on to the rest of this. So we broke out of the geometry, broke out of our channel line here, and then we're going to move on to the fibs. So fibs right here, most likely target for a wave 3 is, again, we're going to want to look at the substructure here to kind of see, this is a subwave looking like it's going to end. If it's 1 2 1 2, we're may have to recalculate, but again, this is going to be the most likely target for a wave 3. This is where we're going to be target for a conservative take profit. All right, so that's the overall simplification of the wave 3C trade setup here. Just a few more notes on this. You can use this in a bubble as well, I found. The biggest thing you got to look for, even if the PA over to this left area is just junk and garbage, you're at an area of interest, get an impulsive swift move down, and then you get a corrective move or some lazy move going to the right here into some consideration should be made. A trade consideration should be made, in my opinion. Not financial advice, do your own research. But anytime I see a swift move down from an area of interest, I'm watching to see if this retrace comes back into some other confluences that I'm looking for. All right, so now that we have a basic overall idea of what we're looking for and model of what we're looking for, we're going to do a little kind of exercise here to kind of go through these as a potential trade setting up. Again, this is idealized. It's going to be different in the market every time we look for it. So to start off, we're going to go through our checklist every time. Again, we go through the same checklist every single time we look at a chart or look for a trade setup, whatever our plan may be. So for this one, we're going to identify an area of interest, which is down here. All right. Step 1, got a check mark next to step 1. Step 2, identify an impulsive reaction from an area of interest. Verify that it's not a sea of flat. So before I get into this too far, I'm going to keep this just at one of the higher degrees, and I might dive down a little bit. I have 3 degrees kind of labeled up here, but in the interest of brevity and conciseness, we're just going to go through the highest degree. I might go off a little bit, but that's kind of the idea here. So I'm not going to address every single label on the chart that I'm about to show, but I'm going to go through the highest degree at least to kind of give you an idea of what to look for. So we have an area of interest. Number 1, check mark. Number 2, identify an impulsive reaction from that area of interest. Verify it's not a sea of flat. So we're going to slide this little shadow over here to the right. So right now, off this area of interest, we have a swift move away from it. So step 2, verified. Look left, not a sea of flat. We had a nice move down, came down like this, and we got a swift move back away from that area of interest. All right. So step 3, we're going to watch this now. Since we have a completed impulse, let's say we have some nice subdivision in there. We're pretty confident that the wave up is done. We're going to start watching for an internal retracement. So we're going to observe, identify a potential corrective retracement forming within the range of the identified impulse. And I'm going to move this to the right. All right, we got a swift move away in the fashion of an impulsive move away from this pivot up here. So I'm going to mark off this pivot as my range high for the impulse, and then my range low is going to be down here, low origin, the area of interest. So there's my range low. So right now I'm looking for an internal tracement between this level here and this level here. So far I have a swift impulsive move down, so that can mean 2 things. Either this is A or this is a 1 moving down. So now I'm just going to watch, observe, and try to identify exactly what's going on. All right. So this move up is corrective at the moment. So I'm just going to keep watching. Not sure exactly what I have. All right. So I've been this an impulsive move up, an impulsive move down. I have a three-wave move going up, and then a break of this pivot. This is when the eyebrows get raised and the antenna go up, whatever. So because as soon as this breaks, we know that this is not a 1-2, 1-2 going up. That we potentially have a zigzag that's about to come in. All right, and what does number 3 say? Observe, identify a potential corrective retracement forming within the range of the identified impulse. So from here, we're not entering anything yet. We're still observing. We think that we've identified a zigzag in process here, progress. So now we're going to kind of look left. We're going to set up our next section here, which is number 4. Okay, I think I have a zigzag going on here. Now I got to set up what the most likely targets are for a zigzag. Kind of look for confluences to enter a potential trade. All right. So I'm going to move this to the left or to the right a little bit more. Number 4 here, based on most likely targets for a corrective pattern and other potential confluence, scout and entry, look left. So that's what I've done here is I marked this out. Okay, I got the 1 to the 1. Okay, C. It's internal to a corrective channel. There's some structure over here that I can play off of as well. It's retracing into the most likely target for a wave B or 2 of an impulsive move between these ranges here. So I have everything lining up. So this is where I'm going to scout my entry. All right here in this area, along with all the other confluences. So I'm looking for a box of confluence here, look for an entry to go long at this point. Now there is a way that you can wait for confirmation. What we can do is we can wait for this portion to be passed up here before we make an entry. That's something a little bit beyond this, but that's a way to confirm that, okay, we have an impulse move up, we have an impulse move down, we have a correction up, which could be a wave B or a wave 2. We have a swift move down, and then we break this level right here, which would negate or invalidate a potential wave 1, 2 down. That's kind of a little more advanced than this, but this is one area where you can kind of confirm that, okay, it's more likely now that we have the correction is complete. We got a swift move away from our area of entry. Potential for this playing out as a zigzag or a 1-2, 1-2 or an AB. At this point, we don't know exactly what this is. At this point, we kind of know, okay, it's pretty likely that this could be a zigzag in motion or a move up is likely to happen here. All right, so let's say we went through all that. Everything's fine. We're pretty confident because of all the context to the left here that we're dealing with an ABC coming or a 1, 2, 3. Again, we can use this setup in a bubble as well. So right now, again, we have a move away from the area of interest. We have a correction within the range. All right. And then we took an entry here based off of confluences on this pattern here and other confluences, algos, EMA, structure to the left here, whatever you choose, we took in this entry. Now we're going to be looking to set up a trade plan from here as well. So the trade plan, we're going to enter here. We're going to put our low down here underneath some confluences down here as well. Algos, depth of correction, some structure, let's say over here, or this pivot low. It's really up to you. You're going to have to decide. Okay, that's our trade plan for the entry and the stop loss. All right, so this is where number 5 comes into play. We're going to look to set up our plan to take profit conservatively at the wave C and wave 3, most likely targets if reached. Fibs, geometry, subwaves. So we can write off, again, we don't know what this is. It's a wave 1, it's a wave A, we have no idea. It's a wave 2, it's a wave B, we have no idea. You can always adjust your targets if you like. Again, the first conservative one is going to be a break of this, because this could come up from here, could come up correctively, and this just be a B wave of something. Eventually, based off of some of the patterns in Elliott wave, eventually this level will break, but it won't be an immediate break. Okay, this could be a triangle, so it could be an A of a triangle, B, C, D. Eventually, it's going to break up and break this pivot right now. But we don't know that at this point for sure. So take profits for wave C and 3. Again, right away, the first one we're going to look at is going to be the conservative break here, 1-to-1 of this move here, and then the 618. All right, so let's just move this to the right here and see what we get. All right, we're going to move it over there. All right, we got a break of this level here, so we're confident that, okay, it's not a 1-2, 1-2 to the downside, which is good information to have and good to know. I keep moving on. All right, we do have a possible second entry here. We're not going to go too into that. We're just focused on this larger degree trade. We're going to keep moving to the right here. Okay, so right now we ended up hitting the 1-to-1. At this point, it's up to you. Again, conservatively, taking profit here is not a bad idea. Once you get a little more advanced and kind of know what's going on, you can look at this wave structure here to kind of see where you are. Does it look like a wave completing? Does it look like an impulse is completing up here? We have other confluences up here that could block it from going on. This doesn't have to shape up like anything. This could come up nice and sloppy and ugly. But at the 1-to-1 and the channel line, that's a pretty conservative area to take profit. Depending on how much is up to you, but again, this isn't the worst area to take a little off the table and kind of see what happens from here. There is a chance you can always add later, but we're just dealing with this setup right now. I'm not going to get too far into that. So this is going to be our first take profit, right? Market moves on. All right, we get a move up. All right, so we moved on. We broke out of the channel here, which could be an indication that we are dealing with a wave C or a wave 3 movement out of the channel line. All right, we haven't hit the 618 yet, so we're not taking profit yet. Wait and watch to see. Okay, we get a wave 4 here, which complements this wave 2 down here. So we're pretty confident that we're going to get one final move up to the 618 here to take profit for a wave 3, which 1618 is the most likely fib target for a wave 3. Again, there's going to be a lot more context in here. It doesn't have to reach the 618. It can go way past the 618. So there's going to be certain kind of nuances to deal with when you get this far into it. This wave 3, this could be a wave 3 here, 4. Anything beyond this is a blessing from the EW gods. It doesn't have to go up to the 618. As long as it breaches this, we have a wave 5 impulse complete. All right. But I digress. Got the wave move up. So this would be our final or another take profit area for us to consider. All right. So at this point, our wave C3 trade setup is complete. You could all out right here. You could take your third, fourth, fifth portion off and let one ride. It's really up to you. The reason we don't want to ride this out to oblivion is because we don't know what's going to happen next from here. Just things get a little less likely as far as time and as far as structure. Because also the thing that's built into this trade setup is that 1618 is also a most likely target, not only for a 3, but for a C as well. We're looking for a 1, 1272, and 1618 is most likely targets for wave C as well. So we have a confluence of fibs here to take profit at, just to ensure that, okay, if this dumps from here, we're looking pretty good. We got an impulsive wave move up here. We got an A for a 1, internal retracement, break, 1, 2, 3, 4, 5. So right now, we still only have an ABC zigzag. We've just extended a little bit beyond the initial area we would expect a zigzag to go, which is 1-to-1. Yeah, that's why taking profit here is such a good idea. I'm not saying you have to. Again, do your own research, all that kind of good stuff. But this is the biggest confluence, between the C and the 3 setup is 1618. Again, this is an ABC. This is a 1, 2, 3. We have no idea yet. Could be stuff to the left at play as well. The other reason to take profit here is because we're not really in it to catch tops and bottoms. Okay, this could go up another couple cents or whatever it may be, but we've taken the meat. This is the meat of the move right here. All right, anything beyond this is good to have. Again, this goes beyond the bounds of our C3 trade setup. But anything beyond this, it can get a little sketchy, depending. Yet another reason why it's good to take profit here is because what happens after a potential 3 coming to a wave 4? What happens after a zigzag is complete? You're going to get a move down. You're going to get drawdown. You're going to get a move past this low down here. So things can get a bit sketchy. That's why taking profit here is a good confluent area to take profit. For one, this could be a completion of a zigzag. 2, we got a wave 4 coming, which takes time. So if you want your capital to deploy somewhere else, might be a good idea to take profit here, not deal with all this. Or you can wait for a pattern to emerge and then play the pattern up as well. We'll get into that. This is kind of the basics of the 3C setup here. Once you get to this extreme, you're sitting pretty good in profit. You know, move up has been mainly caught. Could go up to the moon, who knows? It could drop down to doom. At this point, you're sitting pretty good in profit. Made a good successful trade. RR is good. Good P&L, all that. Happy thoughts. So just for the sake of kind of continuing on here and looking at the fractal nature of things, we're just going to keep moving here. All right. As you can see here, we've had other kind of entries as well for the C3 setup. We've had an impulsive move up here and then an internal retracement down to this area of interest as well before we got to move up. We would take profit here, which is right before this resistance line. And then if that resistance line breaks, you take a little bit of profit here and then work your way up. All right. So this was another trade setup here. Even if this was a zigzag down, this could be part of a flat. You would still capitalize because in the B of a flat, you're looking for a zigzag or zigzag family kind of to play out. So you'd get this 1-to-1 potentially if the zigzag plays out as we'd like. Of course, these can all fail and it can come down and hit your stop. And then you just reevaluate and look for another setup. No big deal. So just keep things moving on. Keep this video as short as possible. We're going to look up here. Okay. We ended up taking some profit here. Market moved up a little bit more. Started reversing. Again, we're going to drop down a degree. What do we got? We got an impulsive move up to an area of interest. Say this is another area of interest up here. We're hitting some fibs. We're hitting the end of this impulsive looking move up. You know, momentum's looking down, all that kind of good stuff. We get a move away, again, impulsively from that area of interest. And then we get an internal retracement into an area of interest within this range, and we get a move down. So this is another area for a C3 setup. Because even at this point, we have A, B, 1, 2, 3, 4, C, A, B, or is this a 1, 2? We don't know. Either way, we have a pretty good indication that we're going to be making a move past this pivot here, at least. Potentially again. This is another area where you have a swift move down, retracement internally. Is this going to be the C? Some kind of zigzag for a correction for the 4? Or is this here done? We're going to move down, take this low out. This is why this setup is such a powerful one, because you don't have to know exactly what's going to happen. You don't know. I don't know if this is a A, B, C or a 1, 2, 3. I have no idea. I have my kind of suspicions. But if I want to catch the move, or if I think this is looking like a good setup and everything's playing out in confluent, why wouldn't you take this? This is potentially one of the better setups where you get at least a 1-to-1 this move here. Again, potentially could go to 618, all that kind of good stuff. But this is such a good setup where if you get in here, if it goes to the wave C, you know, most likely targets, that's a good trade. That's a good win. If you catch it here and it drops down to here, that's an even better trade. Right? So that's why this is kind of a win-win trade setup. Because all up in here, you don't know. You just all you have to go off of is this impulsive swift move down, internal retracement within the range, and then the break of this range, and move down. And that's all you need to have a successful trade. All right, so we're going to keep moving on here. So we got a 1, 2, 3. We try to play this. We only caught the C. We got out. We saw it coming back. We moved our stop up. We did whatever we had to do as part of our trade plan. Okay, we got stopped out. Base hit. Still in the green. All good. Gonna move back up to here. Okay, we've identified that we have a 3-wave move down, a 3-wave move up, and we have an impulsive move down. Again, what two impulses do, they start and they end things. So we have an impulsive move down. Even if this is junk over here, we don't know what this is. We have an area of interest. We have a resistance up here. It breaks back down here, sweeps the low, okay, impulsively. Then we get another impulsive move up. All right. So based off of this, we have an impulsive move down, impulsive move up. We look left. Okay, there's a possibility there's a flat here. So it's going to be up to you kind of at this point. Do I take the trade? Do I just sit on my hands? Do I watch how things play out? This is kind of one of those instances where you look left, you say, okay, oh shit, this looks corrective and flattish over here. So not going to play it. You could still take the trade. You'd get stopped out in this situation. But that is one thing you could do. If this is all junk over here and you have no idea what's going on over here, you see an impulsive move down and you think you have a zigzag or some kind of corrective pattern internally coming, you could still jump in with less of your capital at risk and see how it plays out. Again, that's up to you. Moving to the right. All right, we get a wave move up. We get a complete impulsive cycle. All right. So if you enter down here, you took profit up here, you did pretty good. You didn't hit the top, you didn't hit the bottom, you got the meat of the move. It was quick and nasty, you got in and out, your capital is ready to deploy other places. At this point, you could jump out and wait for the wave 4 to come, where our most likely targets are for a wave 4, that's a whole nother thing. And then look for a play off of there as well. If we know this is a triangle, you could try and play that. If it's flat, you can play that. Kind of sideways combination that you figured out, you can play that and wait for an impulse up out of your area of interest, whether that be the end of the pattern that you're watching or not. Look for an impulse out, look for an internal retrace and continuation. So in our little scenario here, we got 1, 2, 3, 4, 5. We got a completed impulse up. Good to go. Now we have an impulsive move or a swift move away from an area of interest at the bigger degree. All right. So at this larger degree now, we know we're working with a damn fine looking impulse, if I do say so myself. And we're going to be looking for a trade entry at the largest degree that we can here. So what are we looking for? Again, we'll go back to our setup over here. Identify an area of interest. Done. Identify an impulsive reaction from the area of interest. Verify it's not a SIVA flat. All right, we have our impulsive move up here. This whole thing is good to go. It's our impulsive move, swift move away from the area of interest. We look left, there's no flat. Observe, identify potential corrective retracement forming within the range identified. All right, so we have our impulsive move up. This is now our range high, so we move this from here to here, and we keep this down here the same. This is the low of our impulsive move, the start of our impulsive move, and up here is the high of our range, because this is where the 5 of 5 is all done and good to go. Observe, identify a potential corrective retracement forming within the range of the identified impulse. All right, so we have our impulse up. We've identified the range of our impulse up here, down here. All right, so now we're just observing. We can get nuts and go degen and trade everything in between this range here if we want to. I'm not going to go over that too much, but everything within this at a lower degree, within the swift move up, if you're looking to play the retracements, you can play the retracements between this range. But you have to remember that we do have an impulsive move up, and that anything to the downside could be limited, depending on how things play out. All right, so we're going to sit and observe. Okay, I'm going to move this to the left here, or to the right here. All right, so what do we got? We got to move down. So in Elliott wave, the first kind of sign that the trend is changing here is we're going to look for the wave 4 of the wave 5 here, and we get to move down. What this indicates here for us in Elliott waivers is that the wave 5 of 5 is complete, because right now we know, okay, we can't break the low of the origin of the wave 5, which is done here. So now we know that the wave 5 is done and the impulse is potentially complete. Now we don't know for sure if the impulse is complete until we reach this level here. At this point, we know that the impulse up 1, 2, 3, 4, 5 is potentially complete down here, especially if this moves as an impulsive move. All right, so right now we know that this impulse is complete. Wave 5 of 5 is complete, and the wave 5 is complete. There's potential that we could be getting a trend change here. At the smaller degree, we get one. We get a move down, a swift move away from the area of interest. We get a corrective move within the smaller range, and we get a move away from there. All right, we get a nice impulse down. So if we head back over here, we're still observing. All we have know for sure is that this impulsive move up is done and complete, and we're going to be looking for an internal retracement to play long. All right, so from here, we're still observing. We can play all this little stuff in here if we want. We're still observing, still observing. All right, so we have a swift move down. We have a potential for a zigzag move up. So again, from this point, we get a swift wave move down, swift up. We get an internal retracement to this as a potential B wave or 2 wave. And then we get a potential C wave up to here. We're going to look for all of our confluence as we have before. We have some resistance here potentially. We got algos. We have most likely target for a wave B or 2. Everything looks good. All right. There's a potential for the C wave to come in. We're going to move a little more to the right here. So at this point, we get a break of this level here. So we know that this isn't a 1-2, 1-2 setup. And that we're potentially looking at a completed zigzag here, headed to the downside. This is the point when we want to start setting up our trade plan again. So, okay, what's the most likely target for a zigzag? We have an impulsive move down. We have this corrective move internally, and we have a break of this down, which completes this as a potential zigzag. So now we're going to be looking for a trade entry. So potential confluences, again, we're going to take this, a fib from this range low to this range high. We're going to look for the most likely target for an internal retracement of a wave 2 or wave B, which is 50 to 618. We're going to look for the wave C to equal the same length as the wave A here. We're going to look left to see if there's any kind of structure over here that it could find support on. We're going to look for all those confluences to scout for an entry. All right. So one of the other ones I forgot to mention was the base channel. So we put the base channel on. Everything looks good to go. We hit the outer parallel here. We hit the 1-to-1. Everything looks gravy. We got the 50 to 618 in there. We scouted our trade entry. This would be where we enter our trade, as long as all the confluences line up. All right, and this is where we, again, as soon as we move away from here, part of our 3C trade setup is we're going to start looking for this level up here to break, this range up here, for potential continuation swiftly to the upside. We will be looking for our wave C and 3 take profits as well. All right, so that kind of wraps up my take on the C3 trade setup. If you have any questions, definitely leave a comment below, or you can ask me in the Discord. We do have a free Discord that you can join. Again, if you sign up on the website, you will get some Elliott Wave cheat sheets here, which is always good to have. I still use this every single day. And we have 2 Elliotticians on staff here that can help you through your learning. I think just being a pro member to come hang out with us and be friends is like $1 a month. So something to consider. We can talk about Elliott Wave. We can talk about all these trade setups all day if you like, when we're around. So again, this is kind of my bread and butter. This is what I'm looking for. Zigzags happen in every pattern in Elliott Wave. So when they pop up, they're pretty powerful patterns, hence making this trade setup such a powerful and useful trade setup, and something that I think everyone should have in their tool belt for sure. Thanks for watching. I hope this was helpful. I'm going to have all of this stuff down in the description. If you want more setups like on real charts and stuff, definitely hit me up on Twitter. I'll be there. Twitter, TradingView, all that stuff. Look forward to talking with you. Join the Discord. All right. Again, thanks for watching. Trade safe, trade smart. Take it easy. Bye.